Hey everyone, Tom here. Today we'll be discussing our latest thoughts on the stock market, along with our technical analysis thoughts on the S&P 500, Nasdaq, and Dow Jones. Yesterday we saw a bullish hammer coming off the 20 moving average on the Nasdaq. We're taking a look at that, but more importantly, teaching you a way to look at candles a little bit differently that I think will help you a lot in the markets. Stay tuned. I wanted to begin this video by discussing yesterday's moves. Firstly, Wells Fargo did not report that well. JP Morgan came in a little bit better than standard. And what actually happened was we had big moves in sectors that have not necessarily been that loved. Berkshire did really well. We also had oil and energy doing well and some healthcare doing well. And this is off the back of the Moderna virus vaccine race news. Basically, we saw early tests show positive results, and this happens every time we ever get any bearish momentum in the market. As soon as we see bearish results, it seems like Fed, it seems like the Congress, it seems like basically some kind of vaccine or health-related news comes out. And this has been time and time again. It always makes me laugh when I see the comments down below calling it before it happens, and it brings me to a great point. Thank you so much for posting in the comments down below some of your thoughts. Some people in the trading community have great ideas, and you'd be surprised how often I read these comments and I actually think that's actually really logical. It makes sense, and I bring it to everyone's attention. So continue posting. I really love it. And of course, thank you so much for subscribing. We're on our way to 20,000, and I'll stay true to my word. We're giving away $500 when we reach 20,000 subs, and we're just going to give that away to a lucky subscriber as on that point. So thank you so much for following the channel. So let's get into another important fact. Yesterday we mentioned 25% of the volume that on the way up has been retail traders, and the retail herd have really been piling in on the market. This means there's a lot of money in the sidelines, and this money will eventually have to come back out of bonds or cash where it is and come into the stock market. And it will be the next slingshot for the market over the next decade. What I wanted to bring up though was something which Ray Dalio said a little while ago, and that was the lost decade. And I'll be doing actually a video on that over this week. And the reason I'm doing it is I have a different take on it. But I believe that possibly indexes, in terms of indices in general, will not necessarily be the best investment over the longer term because of the nature of the stagnation we might see in the economies coming out of this crisis. Notice how Berkshire, oil and energy, gas, and JP Morgan and other banks have all been very poorly when we go over a 6-month period. But what's going to happen is we're going to see rotations in and out of stock sectors over time. And I think it's actually going to be the best decade to be picking stocks more so than just following a flat indice. You can still trade the indice, but it may not be the best time to possibly invest in indices, and we'll be discussing that point. So one thing that I am looking at is, of course, how if we have good news or anything that happens that's going to be good in the economy, we're really seeing most of the value in terms of the longer term value possibly now out of the big 5 stocks and in some of these beaten down stocks that could go very well over the long term. The ones with good cash flow still and the ones with good fundamentals. And I stress you want to bring your technicals with your fundamentals whenever possible when it comes to trading. Use both and you'll have more success. So let's get into those technicals and talk about the Nasdaq first up. Well, firstly, the 20 moving average held again. We've talked about it so many times on this channel. That is the red line here. It is the exponential moving average. And yesterday we saw a big bullish hammer happen straight off from basically coming down to the level we talked about, and it quickly reversed, and buying the dip was very fast and very sweet, and effectively it came straight back up and it created a bullish hammer. Now, a few people may say, is this a bullish hammer? I thought it might look a little bit different. They may agree or not agree. And there is actually a way of breaking down a bullish hammer or candles so that you can always statistically look at something time and time again. One of the ways I like to look at a candle is, firstly, I want to understand the dynamics between the buyers and the sellers. So what is a bullish hammer or a hammer actually showing us? Well, effectively, at the open over here, prices opened on that time frame. Let's call it a daily like we saw on the Nasdaq just before. Then the market has moved down during this daily candle and it has reached a low, which has then been rejected. So the sellers effectively have gone down. There's been some bearish momentum. And then at some point, the bulls have come in and said, there is serious value here. I'm interested in getting into the market. They get into the market and they push it higher. and then theoretically it closes at a previous point higher than it opened. Now that's a quintessential bullish hammer or pin bar or whatever you want to call it. That's the perfect. But what do we see in the real market? Well, we don't necessarily see that. Notice I've got a red one next to it. It's because it doesn't matter what color your chart is. It could be green, it could be red, it could be blue. It doesn't matter. The premise is that there's been a rejection of price where the bears have lost control and the bulls have regained control. And that's the momentum or the slingshot effect that makes the hammer or makes the shooting star such a good candle. And this is out of our course and we talk about this a lot. One thing though that changes the game in my opinion is breaking candles down to percentages. So here we have a candle and what we've done is we've broken it down to a percentage in the course, talking about it doesn't really matter necessarily whether the open or the close are higher than the other point. It's more about the momentum that we're seeing, where basically the candle has come down, whatever the range is, and then it is bulled back up and effectively closed in the top 20% of the range. So if it's done that and it's closed in that top 20% of the range, it's shown that slingshot effect. It's shown the aggressiveness of the market in that direction. And hopefully that makes sense to everybody, but it is a game changer when you think about candles as percentages and you think about candles from that point and break them down that way. It will change the way you look at trades. Very important. It's all about the psychology of the market. So what about our favorite, the S&P 500? Well, we've still got all our normal zones in. We'll quickly draw them up here for you. So we've still got our 3,000 support. We've still got our 3,150 basically that's been holding the whole time. And on the real market, it's even more clear. Remember, if you're looking for confirmations, use the real market open. Do not use the futures like I've got here. In terms of the high, well, we've reached that a few times and I've got the futures up just to show you where the market's trading at right now. So it looks like we're going to open around 32.20 and we're going to be testing that resistance straight away into the earnings for today and into the earnings for the next coming week. It's been chopping in this range. We've talked about how it's a channel and basically usually with a channel you sell and you buy the zones. But more importantly with a channel, if it breaks out, what do? Well, you usually take the distance of the move. So you take the distance of the channel in the direction of the breakout. So here what we'd be looking at is we'd be looking at the close above. We've talked about how the weekly close above 3,200 would be a big deal. And then we want it to come back, retest the previous resistance, show us roll reversal. And what we want to see is on a smaller time frame, change of trend. Now I continuously reiterate that on the channel because it's key to actually having success over the long term, making sure you have multiple reasons of confirmation to get into a trade. So there's the channel, that's the distance that we're looking for. If it rejects today from this price, well, we're still really in a kind of difficult trade zone. Could you short up here? You absolutely can. It's one of those high reward to risk kind of trades. Basically, you place your stop loss above the high, and then of course, you usually short it. The only problem with that is really going to be that the market shorted already off it aggressively and then quickly boosted straight back into it. So if it doesn't short off here again, it's going to probably try to break it. We are seeing, of course, divergence on the MACD. We're going to be seeing divergence on pretty much any indicator you put up there. I'm sure most of them are showing it. And it's part of the reason I don't bring indicators too much into our charting. And the main reason is because it just shows the same thing on most of them. If there is a key thing, I'll bring it up though, whenever I can. So we might see a rejection. Again, we want to usually see a change of trend on the smaller time frames towards the short. We'd expect the 3150, this current 3230 level, and of course the 3000 still to remain the key levels unless we see a breakout either way. Time will tell, but we're about to test resistance today. On to the US 30. Well, what's happening? Well, the US 30, as many people have rightly pointed out, has a lot of companies that may possibly show you a little bit more about the real economy. And it has, in terms of the Dow, it has been weaker than the S&P 500 and of course the NASDAQ, with the big companies in this suffering a lot due to the crisis. So we saw a bit of a breakout yesterday. The close was above the previous resistance here at this 26 kind of 38, and it's now above all the moving averages. The 200 SMA on the daily has held it back, but it's rejected that and it's gapped up. Now we'll go and probably see it try to test these previous peaks with a bit of rotation into value based on that kind of vaccine news yesterday. We might see it test up here, firstly come down do the role reversal where it might come down, test here, go back up, test this point, and then we'll have to see what happens. That's the kind of thing you're looking for trading. Remember, it's really smaller time frame trading that you can do right now. Long-term investing, you're looking for specific stocks in possibly beaten down sectors that have good cash flow. That would be the kind of thing that I'd be looking at, because the big five tech is super difficult to invest long-term in at these prices. And that's just my opinion, but I do think it's getting pretty heated. And I think a lot of you on this channel would agree with that. So yeah, that's the Dow. Really, the Dow is pretty good technically. It's had some really nice role reversals where previous resistance has become support. I think it's had a really nice trade off these levels. It should have a nice trade off these levels into the highs. And if we continue to see bullish momentum and good earnings, that's what we'd expect. But we are in earnings season, and earnings at the end of the day will change the game. If earnings are bad and we see key breaks of like this 25,000 level on the Dow, well, guess what? The short is on. If we see key breaks above, the long is on. So that's what's going to happen this earnings season. There's no coincidence that we were basically stuck in a range and stuck in a bit of a channeling whipsawing market ahead of all this news. It's what the market loves to do. And I'll reiterate that all the time as well, because it's just the thing that happens every single time. So quick earnings update in terms of what's coming out. These are the companies to watch today. Obviously, we have Goldman Sachs doing reports. There's even more news next week, and we'll continue to have a bit of an economics calendar every day with these key companies, and you should be watching them every day to make sure that sentiment is still holding. Remember, sentiment is key to the markets, and depending on how many companies beat or meet expectations or don't meet expectations will change the sentiment on a daily occurrence. We should be really tracking all of that information, and I'll try to get a tracker for you so you can see how many are beating, how many aren't beating, and how many are neutral, because that will change the way the market is. But at the end of the day, the price action is going to be showing you what's going on. So I wanted to bring up this Robinhood tracker, and I just wanted to discuss some of the top stocks. Now, obviously we have Moderna getting rushed into by retail traders yesterday, but there's also Tesla, which continues to have a pile in on it. 22,896 extra retail traders piling in. But even these strange stocks like Rigel Pharmaceuticals, 36,000 new buyers in that. And if you look at that particular share on a chart, you'll notice it is a rocket ship. But what I'm also watching here is the popularity of stocks. So certain stocks like Disney have actually been dropping as people in the retail herd are moving into possibly things that they're looking at more likely going to make some money from. So it's actually really good to watch this. This is robintrack.net. It might be a helpful website for you to check out some opportunities or potentially some stocks you want to stay away from. And hopefully that helps today for everybody. So if you enjoyed this video, make sure to subscribe, give us a thumbs up, and of course, keep commenting down below and help me out with some of your key ideas. They're great, and it's awesome to see so many smart people following this channel. Happy trading, everyone. We'll see you in tomorrow's video. Bye.